it's Indra Abeysekera. One of the learning goals of this workshop is to understand how to monitor petty cash and record appropriate journal entries. Petty cash is a small cash balance that is held within the organization to meet various minor business expenses. It could be for stationery, it could be for various supplies, it could be for courier services or some transportation, but there are minor expenses that organizations have to incur, and it is pointless going to the bank and withdrawing money for such expenses. Therefore, organizations tend to maintain a petty cash, a small amount of cash. When companies maintain such cash balances for petty cash, they have a maximum amount that is called a float. That maximum amount could be $100, and that is the starting amount. And with this starting amount, there is also a minimum float. There are expenses that are incurred, and then the starting amount decreases gradually, and when it comes to the minimum amount, let's say $50, and that is the time it is being replenished by going to the bank and withdrawing some money for the petty cash and then adding back to the petty cash. So let's say petty cash had $100 and there was various business expenses that decreased $100 to $50. Then the company's petty cashier will go to the bank with a $50 cash check and withdraw $50, bring it back and put it into the petty cash vault, so that petty cash balance increases from $50 back to $100. So there's a maximum float and a minimum float, and when it reaches the minimum float, it is the time to replenish that amount back to that maximum float. There are also journal entries. As it goes, there are journal entries. For example, when cash is being replenished, let's say when the petty cash till was open on 1st of January, the cash was withdrawn from the bank and deposited into the petty cash. So there's a journal entry that records that. And then when there are various expenses that was made, let's say $60, you decrease the petty cash by crediting petty cash. It's like the mini cash, and then you increase the expenses, stationery expense and postage expense. In this instance, when the float became $40, it is being replenished back to $60. So cash is being withdrawn for $60 and the petty cash is increased by $60. So debit petty cash to increase petty cash and credit cash to decrease cash.